All right, welcome everyone. Welcome to the trade findings and adjustments for the 17th of October, Thursday. Glad to have you guys here. Today I want to go over two things that I think are vitally important. And the short answer is Keith did a great job going through the uncertainties on our market. So let me ask this group a question. There are about 13, 14, 15 of us here today. Would you want to protect through new highs in a bullish trading market through risks of hurricanes, strikes, conflicts in the Middle East, presidential elections, wars with Ukraine, problems with China? I mean, we could really, if we were to take a look at this, we could really have some oh man, what's going on kind of things. We keep forgetting Russia and Ukraine war. We have China and, wish I could spell Russia correctly. China and Taiwan. I know I'm spelling that wrong as well. We also, I mean, could put in here China versus U.S. worldwide tariffs. It's kind of funny. You want to talk about a hypocrite? Go ahead and look at Biden. No tariffs. Look at Harris. No tariffs. Yet those sons of guns not only kept the tariffs, they put more in place, trying to blame Trump for it. So obviously that's something that I wish I'd see a more accurate news type of reporting on. But all right, question to you guys. Would you be protecting right now or not? In fact, we got something else in here that we should have had in here that kind of makes a difference. Earnings. Earnings, when a stock is most likely to lose 15% or more of its value in the next 30 days. Earnings. What do you guys think? Protecting now? Would you do it? Yes, no, maybe so. What are your thoughts in general? Would you want to protect through uncertainties? Okay, so I see some answers coming through. So Mary says, of course, times of uncertainty are protection. I have a yes from Lee Maxwell. I see Dave says, if you put it that way, yes. And David says, yes, of course. So we're leading towards yeses. So here's the question. You're protecting in a bullish trend. You're putting an opposite bearish position on a bullish moving market. What would you guys tell me in regards to that? What would you say to someone that's going to tell you, hey, you've got it wrong. You're protecting, you're putting bearish trades on a bullish market. You've got it wrong. What would you tell those people? What would you tell someone? There you go. Do you not protect? So you want to answer a question with a question. Do you not protect in times of uncertainty? I love it. I mean, it's, in all honesty, we buy a lot of insurance in our lives, and it's insurance that's there for the unknown. You know, in my family, we did it for babies. We had health insurance. We wanted the best health insurance, right? Boy, my wife can make a baby like no other. We've got 6 kids. Thank goodness we had health insurance at that time. Because we have so many kids and I was starting a business, thank goodness we had life insurance to give us a time of a feel or a sense of protection. I'm really grateful with kids and cars. I'm really grateful we have car insurance. Those sons of guns do a great job of wrecking cars. Is that the kind of protection you want on your hard-earned money that's in the market? And it surprises me because when we talk about trading thoughts, here's my first point I want to get to you. Trading thoughts point number one. I get paid to play in the market. I'm just curious, what do you guys think when you hear someone say, I get paid to play in the market? And a couple other comments came in. I think they're important to read. I try to earn some money on trades to at least partially pay for insurance. Awesome comment. I agree 100%. Depending on the type of business, need to check in which of those risks might affect directly or indirectly. If I doubt, protect so I can sleep at night or just go to Vegas. So two very important comments there. Hey, you can do things to help pay for your insurance. Hey, you should do a deeper dive. Investing isn't just picking a stock and letting it run. You should know your stock. You should see what affects your stock price directly and indirectly. If you're in doubt or you don't know, protect. Save half the value of your position that could disappear overnight. I love both those comments. Excellent comments. Paid to play is a trader's folly. David, would you expand on that? Getting paid to play is a trader's folly. That is interesting because when I hear someone say, I get paid to play in the market, dumb money and a very little understanding of rights and responsibilities of options. I'll be 100% honest with you. When I see someone say that to me, I see an idiot. It's dumb money. It's someone that doesn't get rights and responsibilities and doesn't understand what they're getting for a credit. A credit is not protection. Would you rather protect a stock with a covered call, or would you rather protect a stock with a long put? So here's where I'm going to just point out this to you. Would you rather protect stock ownership with a long put or short call when both give you 3%? What I mean, 3% credit on a short call and 3% cost / debit on a long put. And the funny thing is, I hear it all the time. People tell me, I get paid to play. Short call credit equals 3% protection and a 97% loss potential on the stock. Long put debit equals 3% loss on stock with an at the money put protecting 97% of the risk of the total invested capital. It's simple. Would you rather get paid 3% for 97% risk? Or would you rather pay 3% to make that your total risk and cover 97% of your total invested capital? This is a no-brainer. This is a no-brainer 1 million times out of 1 million times. Do you want 97% risk? Or do you want 90% of that risk covered by paying for protection? When I put it to people like this, it's shocking how sometimes a light bulb clicks and you can almost see it in their minds. I'm an idiot. I'm not going to tell that to people, but this is point number one that I wish people understood, because you get bought into someone sometimes saying a really stupid comment. I get paid to play in the market, and I just think first thing comes to my mind, an idiot. No experience, no understanding. You can't get dumber money than that. And the numbers don't lie. Trades. Point number two. Can't type. Point number two. Think outside of the box. We're going to go with Baidu is bearish. And I've got a chart here. I really enjoy this chart. I'm going to bring it in so we can use it. If I can just get it out here. People don't think. If you're trading in the market, you got to use your brain. You've got to think. I find it really funny because we had protection on Baidu since 110. Give a second for my computer to populate here. There we go. We had protection on Baidu at 110. Love to say, hey, we were smart. We caught up here at 115. We had it at 110, took it off down here at 103, and then added 103 back on. So from 110 to 103, we were making up part of that $7 loss. We had 103s in place. And on Monday, we broke the 200-day simple moving average. So we put on a second set. A second set of puts at $99. We had two sets of protection working for us on the way down. And now we have Baidu testing the 50-day simple moving average. What does that look like in your account? Again, the paid to play people are freaking out. Oh my God, you spent twice as much money on protection. I get paid to play, you spend 2 times the amount of money on protection. So I'm pretty sure this was Monday's movement. Monday, Baidu lost 5.19% or $5.14. And we had our 103 puts in place. Stock lost $2,000. We made up 64% of it. We made up $1,280. But because we added a second set of puts at $99, you want to see something interesting? Same exact expiration, 22 of November 24. 103s should make more money. But the 99s ended up making some more money on a day that we lost $2,056 on our stock. We made on one set of puts $1,280. On the other set of puts, we made $1,430. We made $2,710 on a stock that lost $2,056. And we've done this for 2 or 3 days in a row. Yes, and yesterday we took off protection. Actually, beginning yesterday, we took off protection. But guess what we're going to do again? We break the 50-day. We see the stock not able to hold this 50-day. It's most likely going to go back down to 84. We're going to put another set of puts on, maybe at 90. We're going to put a set of puts on at maybe $90. We're going to be protecting on the way down. We're going to put a second set of puts on again, like we've done on Baidu. We're going to make more money on the way down than the stock is losing. That's what we do. Again, you could have been one of those dummies. I get paid to play. I'm here, I'm going to get 3%. You're toast. 3% on 110, $3.10. You have $106.09 to lose. The stock has already lost $24. You made up $3.10 on the way down on your covered call credit. If you took the whole credit in. Not really impressive when you look at we did just yesterday. We took $3.20 in on the put and $3.57. In one day, we made twice as much as your total credit. In one day, we made $710 more on every 400 shares that were owned than those stocks lost on that day. The stocks lost $5.14. We made an extra $1.60 profit. We made more on the way down than the stock lost. This is what I'm trying to get you guys to wrap your head around. When you hear someone that says, hey, I get paid to play, you hear someone that says, it's a protective put, you got to think. You got to think outside the box. You got to use your brains here. You got to understand, hey, a credit gives me 3% protection to the downside, which means I can still lose 97% of the value of that stock. I get paid to play. You're an idiot. That's not a factual smart statement to make. I pay to play. And I protect 97% of the possible downward movement by paying to be in a protective position. I make more money on the way down than the stock loses by $1.60. On every $2,056 that my stock lost for a couple days, I made $710 more than the stock lost 2 days in a row. This is what thinking outside the box means. This is what using your brain means when it comes to options. Don't get caught up in those educations or the comments of someone that's not trading in real money. Yes, our next step, it's a no-brainer, right? Give me a quick second here just to be able to put this into plain English. Let's get the correct font size so you guys can read it and so I can read it. Times New Roman is in here somewhere. There we go. We're going to bold it. We're going to make it 16 so I can see it. All right. Next, Baidu step. Very easy, right? Next Baidu step. If it breaks the 50-day simple moving average, we will add 91 or 90 long puts in place because this is important, because the stock will most likely fall back down to the 6-month lows of $84. And the short answer, plain freaking English, plain freaking English, we will make up every penny if not more than the drop down from roughly 115 to $84, which is going to equal, if I do my math right, we're going to make up roughly $31 of the loss on the stock, or the $31 downward movement. Is that important? Is that important? Will $31 divided by where it was at 84, if I can just kind of, well, actually, that's not fair. You got to go from the 115. So $31 divided by 115. 31 divided by 115. Can't get my calculator to work. 31 divided by 115 equals a, let's just round it up just a smidget, equals a 27% drop on the stock that you just made up every penny. If a stock dropped 27%, would you like to make up every penny on the way down? It's going to get back up there. It moved back up there in like a week because there was some talk that we're going to be on the same page with China and tariffs, and China is going to be boosting their economy. That's like getting a 27% gain while everyone else just waits for it to come back. I've been pretty amped up today. Are there any questions on how important it is to understand rights and responsibilities, to be able to double up on puts, to go ahead and pay for options? The short answer is the risk reward for a debit trade in options versus a credit trade is night and day difference. Night and day difference. In fact, the returns, the maximum returns are night and day differences. You show me someone that's a credit trader, I'll show you an idiot in the stock market. I'll show you dumb money. I'll show you someone that has no clue what rights and responsibilities are. And I will show you someone that needs to be taken back to the woodshed and beat like a redheaded stepchild for even talking that way and putting so much money at risk in the stock market. Any questions you guys have? William, you suck. Kevin, does that mean you don't do credit spreads? No, there is a time and place for a credit spread. But I'm not saying that's the only trade I do. I'm not saying I get paid to play in the market. It's that credit spread or credit option mentality that proves to me people don't know what they're talking about. They've never worked the numbers. They've never traded in real life with any real money. You know, you're a credit guy, you got 15 grand in the market. I'm not impressed with that. I'll show you 42 million. Big difference. Education. That's a big push on the education. Get paid to play. Shows me the educator has his head so far stuck up his butt that he's never traded any of his real money because he doesn't understand the risk to reward ratio in the least little bit. That's what I'm saying. Good question. Are there any other questions? Going once, going twice. Done. All right, guys. Hey, appreciate you guys being here today. Yes, these are real positions from real brokerage statements, making real money on the way down on Baidu. Nice to have you with us. Now you know our next step for Baidu. And today, if Baidu breaks the 50-day, we're adding a second set of long puts to continue to make more on the way down than we would expect Baidu to lose. No, we can't guarantee it's going to go down to $84. Past history never guarantees future performance, but past history gives us a great idea where we can take positions off and on and look at that past history to see where we expect a stock to run to. All right, guys. Hey, have a wonderful weekend. I'm heading off to Houston come tomorrow. I'll be doing all my stuff tomorrow. Well, next week we'll all be done in Houston. Thank you, Abraham. Always appreciate you showing up. Way to represent Brazil. Lee, same with you. Appreciate you showing up. Mary, Dave, David, William. I know, William, you're overseas, I believe, in Europe and England. Always great to have you as well. Guys, have a wonderful day. I hope this is important and helpful for you. I will get this posted really quickly, and I'll talk to you then. Bye-bye.